What's going on, people? It's GBP, baby. It's currently 9:54 p.m. on Wednesday the 24th of May, and you can see that we've continued to trade into this imbalance, which is what I wanted to see happen. Um, Yesterday I called lower prices and we saw that execute today, so it's nice to see that prices doing as expected. I just wanted to start with the weekly because I wanted to point out that if we do trade through this gap, this imbalance, then I want to see us start to run in towards this range here, and I want to see this act as support. But obviously that's probably going to take a while. It's probably going to take a few weeks to get there. I can imagine there's going to be some consolidation. But right now, I have my eyes on the sell side liquidity. Furthermore, if you look at this is the same chart on the 4 hour, but with my new week opening gaps all marked out. So this is where we are now. You can see that we've left the consolidated range, which was between this open and this open. So we were consolidating around here, a lot of consolidation, and then eventually we broke lower and we've left it, which is why I therefore have my eyes on this Sunday opening price here. I want to see some kind of resistance, which also happens to be between, which also happens to be below this sell side liquidity, which I have marked out here. That's that same area, and in this bullish order block. So there's a lot of confluences as to why I'm continuing to have this bias of lower prices, but we'll drop down to the daily and have a better look. So as you can see, this is today, because we had a high impact news driver today, which was inflation rates. You can see we wicked higher and then moved lower straight away and continue to trade into these lows here and here. And I do have my eyes on this range here. One thing that I suggest remembering and realizing is that wicks are ranges too. ICT states this, but wicks are ranges just as much as fair value gaps are. So when I see a long wick like this, especially like this, when price is going to draw to sell side, I do want to see it trade into this range. And I am going to mark out the 50% level off it, which will be consequent encroachment, which is where I'd want to see us start to retrace or to find some kind of resistance before seeing some higher prices get traded. So 23038, that's perfect. We'll put a dash line and then we'll drop down to a lower time frame. So I do want to mark out actually, let's just talk about today's price action. You can see that we wicked above these relative equal highs resting here. This I did not anticipate, but considering how high impact the news release was, I'm not being able to anticipate this kind of price movement. It's going to take some practice, or it's probably impossible in general, because when you have a news impact that can do moves like this, such high impact news drivers, that's when your probability falls off, and it's probably best just to stay out of the markets in general. However, you can see we flashed up, we traded up, took out this buy side liquidity, and of course then went for sell side liquidity because our bias is bearish. So we should constantly be looking for sell side liquidity until proven otherwise. There we go. So we traded below. So now that we've taken out buy side, taken out sell side. So where should we go in now? We should be going to some kind of fair value or imbalance at the midpoint of the range, and that's what we're going to work out now, which can also help us frame a nice setup for a sell. So I'm going to mark the 50% level out here. $1.2414. And then we're going to drop down to the 1 hour. And you can see that these highs are resting here with it. Now, whether price will actually trade up to this 50% level, to be honest, I doubt it, especially since we took out liquidity here. Like you can see, when I see price action like that, I find it unlikely that price is going to want to trade up here. However, I do see this fair value gap on the hourly, so I am going to mark that out as a potential draw. And because we're bearish, this fair value gap should therefore act as resistance to move lower. So I'll just go through what I've just shown again. We've taken out buy side today during the high impact news driver. We then ran down to sell side liquidity, then took out stops below the sell side liquidity, And now we should be expecting some kind of retracement higher so that we can offer fair value and move lower tomorrow into the longer term sell side liquidity that I have marked out on the daily and weekly. So we also have relative equal highs here that can act as confluence to my expectations. So I'll mark out this swing high. And then we'll drop down to a 15-minute and see that fair value gap again. It's resting just above this swing high here, all these relative equal highs, and you can see how the market builds in liquidity on both buy side and sell side, constantly building in draws for the market. Also, if you look at this shorter term range, you'll recognize that we are also above 50%, so that this will then act as a premium. And if we're going to be selling in the market, which we are, we should be looking for premium PD arrays to be selling from. We don't want to be selling below that 50% level. So this is perfect. On top of that, we also have a breaker here, swing high, swing high, swing low. And you can see price is perfectly lined up with that. You can't get any more perfect than that. So this is where I'm anticipating price to trade to, but of course we'll see in the later hours. So yeah, that's pretty. You can see the way that I break down price. There's a lot of things that are going into my theory. It's not just simply A or B, and you can see that I constantly and always have a long-term bias. If you don't have a long-term bias, you're not gonna get anywhere with this. Like, you really need to have an understanding of where price is drawing to, and I did, that's why I'm so confident in my analysis, in that I understand we're drawing to this sell side liquidity. Like, I can see price wanting it. It's acting as a magnet. We're constantly getting pulled down, pulled down, pulled down, pulled down until it tags it, and then we should see some kind of reversal or, you know, some kind of larger retracement into the buy side. But we're not there yet, so let's not worry about it. But until proven otherwise, we should be acting bearish, which is why I'm confident that we're going to run down into the sell side and into this 4-hour wick that I was just talking about earlier. Right, so that's pretty much my analysis for today. Generally, like, there's not much more to say. Today was, you know, pretty dangerous in terms with the news driver and everything. But it's nice to see. Again, it's nice to see lower prices as we stated, and the fact that we tagged this sell side liquidity aggressively too. Like, you can see price ran straight to it as soon as that news driver happened. We broke down and started running fast towards it, and then we bounced off that 50% level off the range, and then continued lower. So I guess tomorrow we'll see what happens. There are still a lot of news releases and stuff, so we can expect some more volatility in the markets. I am going to mark out the daily dividers. Also, if we look at the total range that we're trading in, obviously I'm not sure if we made the low of the day yet. There's a lot of liquidity resting below there, but if we draw that out into the next day, and if you've been with me for a while, you'll know that I state how price refers to these levels of daily ranges in order to move onto the next day, if that makes sense. Like, price is constantly referring to these levels. So this fair value gap on the hourly, which I have marked out, that I'd like to see price trade higher into, that rests just above this 25% level. So this is going to act as a nice premium again for sellers to get in, and then, well, for the smart money to get in, put their stops, and then to trade lower. But so if we fail to trade below this low before we trade into this buy side liquidity, then it's possible that we might disrespect this and trade higher. I'll repeat that again. If we fail to trade below these lows resting here, so if we do not trade below that and we just trade straight up into this buy side, it's possible that we might be trading higher and into liquidity resting here and here. However, if we take out this sell side first and then move higher into buy side, then all should be good and we should continue to act bearish. Why that is, it's kind of hard for me to explain, but just my understanding of price and how it should deliver is that this low should get taken out before we trade into this buy side liquidity, in order for us to trade to that and then turn around. Like, there's a lot to it, but you'll see what I mean, and in tomorrow's review I'll make it a lot more clear. Anyway, that being said, that's going to bring us to the end of the video. Let me see if I can explain that one more time a bit more clearly though, because it is a bit confusing. I want to see this low get taken out before we trade into this buy side. And you can see that we've aggressively traded down, took out this high here, and it's likely that that is what's going to happen. If we didn't, and if we just traded straight into this buy side, it's likely it's going to run into this high as well. And that's just because of how price delivers. I'm going to figure out a way of explaining this to you guys, but just keep that in mind, as that's my expectation. And then tomorrow I'll be able to explain more clearly after we see what price does. Anyway, how long we've been going for? We've been going for 11 minutes 54 seconds. So this has been GBP baby. Thanks for watching, and I'll catch you in the next one. Peace.